Good morning.
Good
Um,
afternoon.
I wish I wish I was recording when y'all started.
Yes, me too.
Yeah.
It's okay. I have to record a separate little video so you can upload it.
Well, yeah, so you can upload it, but that's cool. Um, how did everybody go this week?
Good until it went awful.
I'm still studying all of it.
Who said good until it went off? Leandra, you said good until it went off.
Yeah.
Why did it? I mean, I guess that's a dumb question when you think about it, but it's not because I was I guess for the first time in a long time, I was kind of frustrated.
Why?
Well, my US 30 analysis wasn't on the money, so it kind of threw off me trading it, right? Coming into the week, I figured that I would make a killing on US 30. And I didn't I made $2,500 total. And
What? That's still that's still good.
Yeah, take that.
It's I'm not saying that making $2,500 is not cool, but when you're anticipating, a $20,000 move or whatever, it's just not the same. And I just happened to come across this Mint FX video. He was going on a cussing rant, about how people feel like that their analysis. He's basically saying people have chart porn, right? They have these beautifully marked up charts, and they don't even worry about whether the market respects the analysis or not, And we are, smart money traders. So you kind of pride yourself in the fact that you have an understanding of, I guess, what the market needs to accomplish, right? But I've gotten to a point to where if the market doesn't do what I think it's going to do, I won't trade it, right? So coming into this week, I was really anticipating the market to push up, to these highs up here, right?
You're not sharing.
Yeah, I don't see anything.
Okay, let me share. Yeah, this is better.
Yes.
So coming into this week, we had this bullish order block a few weeks ago. The market pushed down into it, pushed deeper into it, and we got a daily order block or whatever. So I figured that the market would push up, right? Push up towards these highs, maybe even close to my point of sale. And if it really got good, it would attack these highs that ICT thought would be attacked a few weeks ago, right? I figured we would do it maybe because I expect the market to push down when we raise interest rates later on this week. But it didn't happen, if you look at it on the daily, Friday was a down day. Thursday was the best chance, or not best chance, but it was the second best chance after that huge push we had on Tuesday, right? So you got Thursday and Wednesday, it didn't do anything. It kind of hung out. But Tuesday was the great push day. Monday was the down day, but it didn't push down far like I thought it would push down, closer to this order block.
Yeah,
right?
It's happened again.
It didn't, and it left us this nice little fair value gap down here that will get mitigated whenever we press up the interest rates later on. But still, it never gave us another big, push. Now I thought that we would get, a couple of thousand points this week, especially after a huge day that we had on Tuesday.
Mhm.
So it didn't violate, this order block. But if you look at the next day after the huge push, it basically consolidated, right? It went up and down. This is the day the ICT says he doesn't trade after a huge move.
Yeah, Wednesday.
I don't mind trading, and I traded, but it just didn't go anywhere, right? He
Mhm.
was right. It ain't doing jack. But I expected it to push down, right? I even had my little spot marked up that I thought the market would push to. Then the next day I thought it would shoot up, and attack this imbalance at least. But we didn't get any of that.
Mhm.
Then on Friday, it pushed down into this order block, and it pushed far enough. Like this day, it didn't push into the order block. This day, it pushed in there, So it was a day, a few days that didn't pan out. And it just, at some point, I would just, I just kick US 30 to the side, because I don't trade US 30 like every day, but I trade it when I think there's going to be a big move, and the move never materialized. And
Mhm.
it left me very disappointed. You know how you have a feeling of you just kind of pissed off,
Mhm.
and I haven't been like that in a long time, about the market. But I saw this Mint FX video. He said it happens to him all the time,
Oh
and
wow.
you know, I can understand that. And then it's a lot of things. Like I'll spend time to myself when I'm on the charts. A lot of days I'll go and I'll mark up charts in anticipation for price to do something. And I'll give you an example here with this Bitcoin chart. Maybe there's a Oanda. But I'll mark up charts in my free time, because I'm interested to see.
Oh, you missed it. It's further up. Further up. Keep going up. Oh, 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 there you go.
I'm interested to see if the market is going to basically respect what I think, right?
Mhm.
And I'll mark it up based off of what we know, as smart money traders. So if you look at this chart, I have Bitcoin coming back way down here to like 12,200, and it doesn't necessarily have to get here this year. This is a long range markup. When I looked at the chart, it was based off of us breaking structure, going to the upside, and price pulling back to the area, the order block, or the area that caused the break. And I just want to see, if the market respects my analysis. And I can tell you that if price does push down into this area, I'm going for a buy. You know what I'm saying? Because I already understand big picture what's going to happen. And I never anticipated this to just push straight down here. I know it's going to be some ups and downs, but I think, from my time in Ruby's course, nobody ever expected for Bitcoin to be back under 20 grand either, right? And here lately, we've been a few times under 20,000. So I still think that the market will push down. We broke the structure here. Price is going to push back up, maybe even mitigate this imbalance at about a 34,000 range and keep pushing down. Now, I haven't been trading it down because there are other opportunities, and there are other trades that are more clear for me. But I am watching to see if Bitcoin is going to reach 12 grand. I say all that to say that if you're not marking your charts, or if you're not, outside of what we do here on Saturday, if you're not marking your charts based on what you think, then I believe you're stunting your growth. It's going to take you a longer time to mature as a trader. So I think outside of what we talk about and what we do, you have to mark up charts for what you see and what you think, you know, and you would probably surprise yourself, as far as that chart respecting your analysis, right? Your analysis is there to give you a map of what you think is going to happen. It doesn't necessarily mean the market is going to respect what you think is going to happen, right? But you have to put it on the chart, because you have an opinion of it based on something that you've learned, something that you know about the markets. And if you have a memory issue, like I do sometimes, all you have to do is take notes, like write it on the chart, use a text box, label it, hey, based on this concept or based on this break of structure, the market should come back here, right? Or, whatever you're seeing that makes you think that the market is going to push to an area, you can either text box it, you can call it out. There's a call out box. There are many ways to label your charts. Your charts are for you, you don't necessarily have to share them with everybody or whatever, but you need to get to a point where you're actually marking the charts up for what you think, because it's very important for you to see either it playing out or it disrespecting what you think should be playing out, because that also should be an indication of whether or not you should be trading. My man Mint FX used an analogy that I thought was very powerful. He said, imagine, everybody's been on an airplane, hopefully. And if you haven't, a lot of times the cockpit door will be open and you'll see the pilot and co-pilot having a conversation and checking off their little pre-flight list, right? They're checking all the knobs and buttons, and on the pre-flight check, you have to check off, whether all these instruments are working or whatever, right?
Right.
It's the same. If you want to draw an analogy for a trader, your pre-flight checks are your rules for your trading, right? Everybody should have entry criteria. Everybody should have a roadmap. You don't just get in the trade and not know where you're taking a profit or have no idea of where the market is going, right? Everything should be checked off prior to you hopping into that trade, pressing that buy or sell button. So imagine you're on a plane and the pilot, is asking a co-pilot, check the landing gear, check the wings, check the thruster, check all this. And the co-pilot says, negative, this doesn't work. And the pilot takes off anyway, right? It's reckless. It's it should never happen, right? So I say all that to say, if you're not doing your own analysis and the market is not coming to your zone for entry, it doesn't give you that order block, it doesn't give you that tap in, it doesn't give you something, then do not take the trade. Give a darn if I'm in the trade or Prince or Rhonda or somebody takes the trade. If it doesn't respect your analysis, or if it doesn't respect your entry criteria, do not get in the trade. Because what's going to happen is those other people will make money because they have a roadmap. They know when they're going to get in, they know why they got in, they know where they're going to get out. Maybe they're just scalping, maybe they're holding it, but you have no clue. You're just in the trade. You're not going to make money like that. And maybe you make money on accident like that, but that's a negative reinforcement for doing something that's stupid, pretty much, right? So have your own analysis, have your rules, in mind or next to you or written down. I don't know how you guys trade, if you have a manual log book or whatever, but make sure you're checking off those boxes before you clicking that buy or sell button, because it'll save you a lot of money, whenever I first introduced the way that I trade, with these order blocks and being tapped in, I had to give it to you one step at a time, right? We started by identifying an order block. That's cool. Then we started, hey, the next candle should come back to that order block and tap you into the trade, right?
Mm-hmm.
Where you just draw that box and we'll go, somebody give me a pair that they actually trade.
US 30.
No.
Because that didn't happen. And I was expecting it to happen.
Well,
this
so
week. That's what really frustrated me as well, and that knocked me off my game a bit. I was like, but it hasn't filled.
I agree, but did you take the trade?
Yeah, of course it did. That's why it was started off as a good week and ended in a bad week. But we moved because I didn't have my rules and my trading plan in place. That was my fault. So I know where the fault is. But we're still on.
Right. So this is basically what we're talking about, right?
Yeah, what I'm looking for. And then it had 2 chances to come back in to 2 order block potentials to go back up again, but it didn't.
And it didn't. So I didn't take that trade. The first here's an order block. We expect this candle to push down into the order block, whereas we have an entry right here at the top. I like to wait on the indices. I like to wait for price to push in here to put a buy stop above the price. So when it comes back out, it picks me up, right? That's just how I prefer to do it. Fred had a similar thing on a lower time frame where when price breaks a level, the next candle taps that level and goes up. He gave a little class on the way he does Nas, which is beautiful. It's the same concept. Price breaks a level, the next candle taps that level, and then you're in the trade. So if those are your entry criteria, tell me how you could have got in for a buy right here. You couldn't on the daily. Maybe you saw a different entry on the lower time frame. So maybe the 4-hour or the 2-hour, you got an entry, which is cool. But you have to wait to get your entry.
I know a way that you could have got in.
I did get in.
What I'm telling you is any way you got in without being tapped in is not the right way, right? That's how you end up paying the price. That's not how it was taught. So if you're doing something outside of the way it was taught, then you're setting yourself up for failure. And I'm not saying that's the only way you can ever get into a trade. But if you're getting into the trade off of the concept that I gave you, then you should have never gotten to this trade on a daily, and you should have never gotten to this trade on a daily. So you would have taken no trades in the US 30 this week, right? That's just how it works. And you have to be fine with that. Even though Leandra is posting a $6,000 gain, you can't have FOMO and hop into the trade. And that's what happens a lot of times, and that's why I stopped posting profits, because people have done that. Then they'll DM me and be like, hey man, I got into a trade and I lost. Well, you can't get into a trade based off of the profits that I posted. That's not why I got into a trade. I got into the trade because the setup was there, right? The profits are a byproduct of the setup.
That's why I posted the setup, my analysis and my profits, because what's the point of posting my profits if you don't know how I did it?
Right, but it's still people.
But it was on a lower time frame though. It was on a lower time frame. But I did have this higher time frame analysis.
At the profit, like when you have somebody who's looking at the profit section, trust me, they're not considering a setup. Will's class is more than 17 people every day. It's not because of the setup. It's because
the money.
It's because of the money, right? So it's not a knock on people. It's cool that you want to chase the money, but the money is a byproduct of you understanding the process, right? In Will's class and the way Will trades, you have to mark up those charts.
Mm,
got to mark your lines and your zones, right?
Yeah.
If you don't
Yeah.
do that, you can't trade successfully.
yeah.
So the process is you get on, you do your little lines, and you follow the process.
Right.
The money either comes or it doesn't. Maybe you jack up the trade or whatever. You jack up your entry or whatever.
Or your
It's
over leverage.
with the concept that I teach, it's the same with the concept that Fred uses. It's the same with Alicia and them. I know they haven't been on, but it's the same. The concept is the same. So respect the concept, right? The process of going through it is you marking it up. And then once the trade happens, then you're in the trade, right? And the money will be there. Like if you waited and this tapped you in, this one payday probably would have been good for 2 or 3 months.
Mm,
But you have to be patient enough to allow the process to take place. You have to go through the process. Got to go through the process. Most of the time, trading is marking up charts and waiting. There is no action. It's like baseball. Baseball, you don't go to a baseball park and just watch a bunch of home runs. It's a bunch of strikeouts, maybe a bunch of walks. Then every now and then, somebody hits a home run. So this is how you must trade if you want to be successful consistently, right? I don't mean be successful one time and then screw up the second time, or be successful for a half a week and then blow up the last half of the week. You have to be a robot. It's like when you go to the gym, you don't go to the gym and achieve your results in the first 30 minutes and you never have to go back, or you go back, the next week or the next month. Trust me, you're getting nowhere fast. In order to see results in the gym, you show up to the gym and you do your workout, right? I know we like to look in the mirror, dudes or whatever in the gym, you like to look, but trust me, you don't see any results the first day. The first week, you don't see any results. You feel sore or whatever, but you don't see any results. It takes a few weeks, right? Maybe you don't see them at all, but somebody else sees your results. That's when you understand that the process is producing results. It's not one time. You have to keep going back every time. You got to keep going back. You got to attack that workout. It's the same with the charts. You have to mark up your charts. You have to go through the process every time. You may not have a trade. Don't take the freaking trade. Don't look for an accident to get in. Mark up the charts that you want to trade. Mark them up on the weekend. Allow the week to happen. When you allow the week to happen, your setups will either come to fruition or they won't. And if they don't, guess what? It's a boring freaking week. But you don't lose any of your money.
Hey, Todd.
Compound
Yes,
interest.
Hey, before you switch US 30, it tapped into the weekly imbalance.
Mm-hmm. Up here.
Yeah.
Yeah.
So it tapped into the weekly imbalance right there.
And sold down.
And sold down. Is that a bad entry?
It's not. That's what you have marked up. It's not a bad entry. It's not at all.
But
So
what other additional information do I need other than it tapped the weekly imbalance?
Okay, so where are you taking this trade to?
Where I'm taking it to?
Yeah.
Mm-hmm.
I'm selling it.
Okay, but where are you selling it to?
I was trying to sell it down to the daily order block.
Okay, I'll buy that. So if it doesn't go there, then what? Where are you taking your profit?
Go to the, let me see where I took it. Go to the daily.
Okay, so wait, let's talk about the setup first for people who don't know or they don't see it, right?
Okay.
So,
Is he talking about the overall cell?
well,
Or a
I
small
don't
cell?
want
'Cause
to
I
comment.
don't see it.
I want Terrence to talk about it because he saw the setup.
Yeah.
So, what happened and what did you see, Terrence?
All right. So I marked the weekly imbalance like 23 days ago.
Right.
So I've been waiting
This-
on it to.
This is what he marked up, everybody. Did you do it the same way I did with the GAN box?
Yes, sir.
Okay, so if you do not understand what we're talking about, you must ask a question. You must voice your opinion because you don't learn from just watching and being lost, right? This is very important because this trade setup was beautiful. So go ahead.
All right. Then I dropped down to I want to say the 2 hour and the 4 hour. I'm not looking at it, but. And then I go over back to yeah, keep going. Okay, right there.
Right here.
Yeah, right there.
How do you zoom in, Leandra, without doing it, man?
Just like you're doing now, just keep on zooming in. Just click on the white space. Don't click on the white
Yeah,
space.
that order block right there.
The white space.
Right
Well, I'm
there.
not clicking. I have a touch screen. I just
We've got a touchscreen.
yeah, I just spread my fingers in it.
Yeah, just spread your fingers. Yeah.
Okay, so you're saying an order block. I don't see it on this. I do see that it's an order block, but maybe if I drop down to the 1 hour.
Or if you move, if you move like
What
the
you mean you
side,
didn't see it?
if you move the side up and down, then that can make it bigger as well.
Okay.
Like where the price is. Yeah, there you go. Yeah.
Yeah, so it's several right there. It's like 2 hours, 4 hours, 6 hours.
On the 2 hour, there is no. You don't see the order block. On the 1 hour, you do. You see the in the red, right?
Okay.
So what I mean by I don't see it is when I was on the 2 hour. Of course, I know it's an order block because it's a wick, But I'm just saying for the people in the back that may not understand that this is an order block, I wanted to actually see the order block.
Gotcha.
So basically, if you drop down to the 1 hour, at that imbalance, at the 50% of that imbalance, there is an order block, right?
Right.
There you go. There's your order block. So I marked up, everybody saw how I marked that imbalance, and I marked the 50% of the imbalance with the GAN box. So now, when I drop down, I can mark up this order block, right?
Right.
So this I'm assuming is how you got your area of interest.
Exactly.
And where'd the chart go?
Todd, I think if you double tap, not sure how it is with the touch screen, but if you double tap the access on the right with the price, it should just reset it.
Right here.
And
Okay.
yeah.
Beautiful.
No.
Okay, so this was your area of interest,
Right.
Prior to the week.
Right. Well, like it's been there for like the last several weeks.
But yeah, obviously, right? Like this was last week, this week before. So
Right.
So yeah, you had it marked out.
Yeah, I had it marked up, and then when I look Friday morning, I'm like, oh my goodness, this thing is about to hit this imbalance.
Okay, which is perfect. I know because I saw the chats. I'm gonna play it out a little bit.
Just make it a bit bigger on the side, please.
So this is what you saw Thursday
Right.
going to Friday.
Right.
Okay, so this is what I saw too. I didn't have this marked, but this is what I wanted to see, price come down and tap, right?
Right.
And I'm assuming that you wanted to see that too, but it didn't happen. So you were just targeting this area to sell it back down to the order
To
block.
sell it back down to right there, to that, that'll be to take profit.
Okay. I think that's very ambitious, but that's cool.
You talking about the sell down?
Well, all the way to the order block, yeah. That's a 320 point move.
Yes, sir.
So I think that would have been very ambitious for the market to come back 320 points.
Well,
Without-
I took the profit at some point. I wasn't playing with it, but I think it did do that, Todd.
it never came all the way back. It might eventually push back. I know, and we'll talk about the news. But anyway, I want you to finish talking about your trade setup.
Okay, so when it tapped in, I actually chickened out.
I thought you took the trade. Ted.
Hold on, I did take the trade, but I didn't make as much as I should have made.
Oh, it did come back. Wow. Yeah.
See,
Okay.
it did come back. I got all that. No. So I didn't get. So I'm explaining it to you. So I was scared because I've taken a trade at an imbalance before, but you know what? Now that I remember, there wasn't an order block that it was tapping into. It just filled the imbalance, and so I couldn't exactly. I wasn't confident. I should have been more confident. Oh, you know why too, Todd? There's a daily imbalance above it as well.
What?
So, like, is it gonna fill both of them? Is it just filling one? I don't know.
That's a great question, that's a question that nobody in this chat has an answer to. But
Okay.
This is why you have to watch for what do you want to see once the price hits this imbalance.
See, that's where I got confused. So all I originally wanted to see was it to hit that imbalance and for it to tap into that 1 hour order block that we pointed out.
No,
But then
what you want to see is rejection.
Yeah, that's what Liz,
You want to
Yeah.
see
Lisa said. Rejection.
at your point of interest. So
okay,
price
so
it gives
now-
you a bearish order block immediately.
say it
right?
again.
I said price gets to your area of interest right here,
Yep.
gives you a bearish order block on the 5 minute, right? Now, I got
Hold
it.
on. Can't see that. Oh, okay, I see it. All right.
You see it? Bearish order block. 5 minute.
Yeah.
So, okay. The thing that's interesting to me is
Hold
this,
on. Is that yesterday, Todd, or is that back further?
you said is what?
Is this what you're showing me on the 5 minute? Did this happen yesterday or was this older?
No, this is your tap in. This is what happened when you saw it.
Okay, all right, cool.
Now, I wouldn't have hopped in the trade on the 5 based on the 5 minute, but
So we looked at the 15 minutes. So that's when I was chatting.
okay, but listen, it's cool
Okay.
that you looked at the 15, but if you're watching, you need to pay attention to all of this.
All right.
So for me, this is very promising because you broke it tapped in and you broke structure on the 5 minute.
Okay.
Right.
Okay.
And for some people, this is not a structure break because it didn't break the wicks, right? Or maybe I don't know. I don't want to speak for Kim, but
Now she just wants to see the candle close below the wick.
okay, so maybe that is in her book. I don't know. I don't know how to analyze it from her eyes, but for me, that's a break of structure on the 5 minute.
Me too.
There's also chalk, right? Price goes, this candle breaks structure to the upside, immediately it breaks structure to the downside. And if you know anything about chalk, anytime you get chalk, Anytime price, you see it broke this structure to the upside, immediately broke to the downside. Now you go to the institutional candle, and your entry will be to the institutional candle. Now I don't see an institutional candle, but I know that there's an order block right here in that wick.
Can you go down to low time frame, please?
Yes, ma'am. So if I go down to the 3-minute, I got a bearish order block. This is all setting up beautifully. Like the story is unfolding right in front of your face, right?
Can you go to the 2-minute, please?
Okay, so
Yeah, but what
so
I'm
what I'm-
trying to show you is you don't need the 2-minute because you have this one. But I'll go to the 2-minute. Two-minute is going to have a wick.
But still got the little bit of imbalance there as well.
Inbound. It came right into the cool.
all right, so Todd,
Yes, sir.
so back to my original question. The 1 hour OB at the top of the imbalance is not enough. I needed that plus what you're showing me now, right?
Well, so it is enough, but yeah, the 1 hour OB is enough because that's your area that you think price is going to for your entry. But you don't want to just hop in the trade because it's at your entry unless you're asleep, right? If this happened in the middle of the night and you just had your trade, a short position set up, it would look like this.
Gotcha.
You're asleep. A 26 pip stop loss is nothing when you trade an indice, right?
Right.
And maybe it wasn't 600 pips, but it was 300 and some pips, right? Back to your order block.
Right.
A 12 RR trade right here. A 13 RR trade. So it was beautiful. 26 pip stop loss and a 300 and some pip trade back into the order block, right?
Right.
So that's how you would have done it if you were asleep. But since you were awake and you were anticipating the move, how do you know that this is going to respect your analysis? You have to drop down to the lower time frame for it to give you confirmation. And
With the breaker structure down, is that what rejection means? Breaker structure?
yes.
Okay.
A break of structure down. You had chalk on the 5-minute. You had an order block on the 3-minute, which is beautiful. Those are all reasons for entry that validated. Hey man, you this trade is perfect. You're setting up this trade perfectly, and you took it to the order block, which was perfect. You should have never got scared, in my opinion. And all this, you know, your fear and all that good stuff, is going to come with experience, right?
Right.
Once you can recognize this, which clearly you can recognize it, you had it marked up. You're winning, right? Now that's growth because you can recognize where you see the setup. You had the market at a disadvantage because you had this marked up already. And it's just a testament of you doing your homework in your free time. Because I didn't identify this and I didn't talk about this on a call. Like this is something that you did on your free time. So kudos to you. Your trade execution that's a different story, and everybody will experience screwing the trade up. I mean, I still screw trades up. I'll get in the trade, and if I'm watching the trade, I'll always do worse than I am if I close the phone and go do something different.
Oh wow.
You know, every time it's because your emotions, right?
All right, so let me show you what I actually got in, but I didn't go any lower than the 15 minutes. So this is good, y'all showing me this. Because I was chatting with Kim and she was kind of walking me through. She was kind of walking me through it. So on the 15-minute, you see, so this is another thing I get confused about. So on the 15-minute, you see a few breaker structures, you know, headed back down, but you got so many order blocks back to back to back bullish order blocks.
Well,
Like follow
show me the bullish order block.
Yeah,
This is
where
what
you-
you tap in.
Mean
Where's
very.
the block? Right here.
right. No. On the left side. On the left side. So the little small bullish order blocks.
Hold on. So I don't want y'all to be confused. Of
All
course,
those right.
well, of course, you got bullish order blocks when price is going up.
Right.
You don't care about that. Of course, if price made it up here, of course it was bullish order block.
No, but I'm saying what is the break? Where is the break? Which one? At what point do you say, okay, this broke structure?
Right there.
So you ain't worried about all them other bullish order blocks behind it.
Down here.
Well, you've got
Yeah.
that. You've got that breaker structure there because the wick has gone below. That that green. See that second order block that he's on about, the bullish one, lower to the left. Yeah, there. And then if you go across to the right, that green wick has gone down and grabbed liquidity below that bullish order block.
So this is,
And that could be another breaker structure right there.
it can,
Or
but
Or even
price,
that red wick as well was grabbed all that liquidity.
But
Definitely broke it.
this is what I want you to focus on. This was your last rally, base rally, right? So
Yeah.
this is your last level spot before price shot up, right? This is your last base before price shot up to your point of entry.
Okay.
Understand that? So this is your last floor, your base. You're standing here, you jump up here.
Got
Immediately,
you.
price falls through your floor.
Right.
Okay, so if you went to higher highs and then price goes below your low, what is that? That's chalk, right? Change of character. Chalk. You've heard that term. Felicia knows chalk.
Mhm.
Yeah.
Do you know chalk? Change of character.
No, I don't know it to recognize it like y'all know.
So now you do. You're standing on the floor. You get a new high.
Mhm.
Immediately it breaks your low.
Gotcha.
What are you waiting on at this point? You're waiting for price to go back up into your institutional candle. You can drop down.
Maybe.
There's either going to be an order block or an imbalance here. It's going to go tap in and immediately cook off. Money,
Gotcha.
easy money. That's on the
Okay.
fifth.
So this is where I got in at to the right. Go down, go to the right. Go down. That order block.
You got in right here.
Yeah, got in right there.
Okay.
I mean, that,
But I got in right there and I made the rest of it, but I'm thinking I should have got in.
Should have got in way over here.
I should have.
You should have got in right here.
Okay.
This right here should have been your legal entry if you're watching it, right? If you weren't watching it, you could have got in right here. But
Gotcha.
this would have been a very aggressive and iffy, but it was only 20 some pips, right? If
Right.
this was the entry,
that's my question to Terrence.
So
It's only a 26 pip stop loss, so I don't understand the fear. I mean, did you not use a stop loss?
no, the fear is it's the US 30 and 20 pips ain't nothing. So
It's $20. And I don't know how big your account is, but if you're using the micro or the mini ones, it doesn't even have to be $1 a pip. So, I'm just
the fear just came in because I know there's a daily imbalance that it still hasn't filled, that is still got to fill.
but
And
what
then
he's
I
saying
did,
is, okay,
So you're afraid that it might reverse back up like
I
suddenly.
understand, but what
you
he's
hit
saying
your stop and you lost $20.
$20. That's what he's saying.
Yeah, I get that as well. I get what you're saying.
Sometimes what you're putting, it's kind of like you playing the lotto. How many times you wouldn't spend $1 on a chance of winning, 3 million or 10 million or 30 million?
gotcha.
So
The risk to reward was in my favor. I shouldn't even care.
Right.
yeah, but listen, there's some truth to that, but I still want you to understand what to look for, the breakdown to get in, right? Now, me and you are talking about this on the 5, 3, and 15 minute.
Right.
Understand, there's a group of people that do this on the 1 minute, and their entry would have been way up here, right? There's no limit to the time frame you can drop down and see the same things, right?
Gotcha.
Like we saw this on the 3 minute. The 3 minute entry was way up here. The 15 minute entry is still up there, but it's less clear how
Yeah.
far
Right.
this push up. So
I just
the lower
yeah,
you
go ahead. Go ahead.
the lower you drop, the more clear your entry, the precision your entry.
Right.
You know, now what Sean is saying is based on the 26-point stop loss, your entry should have been right here anyway, because
Gotcha.
you would analyze it. And this area, this 1 hour order block is 26 points because you have an entry inside that 1 hour order block. So 26 points to him, you know, if you're going to risk 26 points to get 260 or 262, you got to do that.
Man, I think it was over 300 points that it fell. And so
Yeah,
that's why
it was,
the question,
Terrence. It was.
that's why I asked the question,
You're going
because
to take it all 300. You're just taking it to the order block.
which was I'm taking it to the daily though. It was a whole gang of
Yeah, he would have got all 300 of those. Maybe it
This-
reversed a little bit. So
But listen, this is the day. That's what I'm telling you. You're not going to get all this down here.
he didn't know that though. That's where he was taking it, is what we're saying.
but I got it into I kept it. I didn't have because I was still watching it.
Right.
I have my TP set, so it pushed down in there a little bit. I got a little bit back.
This is what I'm telling you, Terrence, and everybody on this call. If you're going to have a setup, you have to have a TP.
No, I'm saying I did have a TP, but I was still looking at it.
It doesn't matter if you're looking at it, guys. Yeah. So when you put this in your phone, you're going to have a TP.
Right.
If you don't, this is what happens. You're going to be watching it. Price going to come down. It's going to tap your TP in reverse. Now, in this case, it probably tapped your TP and then reversed and then kept pushing down.
It
But
did.
I'm telling you from experience that you're going to have a TP, and I removed it before. And this is going to tap in reverse. And next thing you know, you have to get out the trade, and it's way up here. You lost 150 points.
Yeah.
Whereas if you had your TP, you take your TP. Don't be a pig.
Greedy.
Paid. Bulls get paid.
You can
Pigs
also
to the slaughter.
trail it too, but I don't want to get into all that and be contradictory. There was one other point. If you go back to that 15 minute where you were showing the chalk. So that first entry that you did not take, Terrence.
Yeah.
If you fib it from the order block to the bottom where it broke the structure before it reversed that first time, if you fib that first entry is probably a 79% entry. You always, I don't want to say always, but most of the time it gives you those optimal entries. So when it breaks the structure, you just got to wait for the pullback. And many times that pullback is 78.6%. So it just shut up, man. It all kind of, I don't know, it all kind of goes together. So when you see that chalk, a lot of times you can just anticipate when it pulls back, it's going to give you an optimal entry. I mean, I see it a lot. See it all the time almost.
This came back past your 78.
Right, but that one that's further down, like right below your blue line there, that's probably.
This is what I'm saying. Price came, this broke structure.
Mm-hmm.
And retrace. This retrace right to your 78 or right close to it, 76 maybe.
Yeah, I mean.
Then the next candle opened up and went right to, it probably went 85, 90. Then the price cooked off.
Man. So to wrap this up, because I don't want to take up everybody's time. If I wasn't watching, I should have got in on the 2 hour. Because I was watching, I mean, if I wasn't watching, I should have got in on the 1 hour OB that tapped into my balance
Yeah,
and took that risk to reward. Because I was watching, I should have waited for this break of structure, the rejection, and then got in.
yeah, there are so many valid entries based on what you are looking for, right? But if you don't have your entry criteria written down, how do you even know, right? Like, is chalk a valid entry for you?
Right.
Obviously not, because you didn't know chalk. So what are your entry criteria off the top of your head? What's your criteria to enter a trade?
So my criteria is still very basic. I want to see the order block, and I wanted my price to tap into the order block, and then I
Okay.
want to build
Hold
on
on.
that.
Let's talk about this. Let's talk
Okay.
about this. So
You
you want
didn't
to
follow your criteria, Terrence.
hold on. Hold on. Hold on. So your criteria is you need a bearish order block here because it's going down. What time frame?
Say it again.
What time frame? 15 minutes. Obviously, you didn't drop down past the 15 minute. So
No.
basically, what you're saying is you needed a bearish order block at this 15 minute in order for you to get in, and you never got that until here.
Right.
Kudos to you, sir. Kudos to you, because this got you in the trade, and
Yeah, that's very painful.
and you waited for your entry. I cannot be mad, and you can't either, right?
Yeah.
You cannot be mad that this was your first entry point. And this is a great lesson for everybody on the call. There's not very many people that would have patiently waited for their entry, even though they saw the price going in their desired direction. So kudos to you, sir. Seriously, because that's the type of discipline that you need to be a successful trader.
Oh, that's new. That's new. I've done it the wrong way so many times.
Well,
You know, you get beat into
yeah, but trust me, there are people who aren't saying anything. They're sitting in the back and they have no clue of what we're talking about. They would have jumped in this trade because they saw these massive moves, right? In their direction. And the truth is, you cannot, you should not, you do not ever enter a trade if it does not give you your entry. You're always going to set yourself up for some failure, because if you saw this big push down and you jumped in for a sell, the next 1, 2, 3, 4 candles up for the next hour, your stomach is in knots, your emotions are screwed up, because it's retracing for the next hour. 1 15-minute candle, the next hour it retraced. So if you just hopped in this trade based off this push down, you're pissed off. You probably over leveraged anyway, because you're gonna make all this money in your mind. The market is going in my direction. So you jump in with a huge lot size, and for the next hour, they take your money. Then the next push happens. Trust me, I've lost many accounts because of this same thing. I see the push down, I jump in with my Lamborghini lot size. They take every penny and the account is blown. And then after they blow after you get that email, immediately you get the email, then the market pushes right in your direction. That's how you destroy your trader psyche. And this is exactly what happens. And there's a reason why the market pushes down like this. To entice y'all to jump in to sell. And most of us jump in right here. And this next candle opens up, pushes in your direction for a little bit. You get to talking trash, and then whoop, they suck it out. This is exactly what happens. And this is why you have to have your criteria as a trader. You got to have an entry criteria, because push down is not your entry criteria. This Notice where these entries are. Like, this is optimal. Comes
Mhm.
right to it. Bing.
No drawdown.
Yeah, this was your entry criteria on the 2 hour. Price came right to it. 26 pip drawdown, 26 point drawdown in US 30. Remarkable. That's sniper. That's precision. But you had it marked up.
That's the one I should have took. That's the
Well,
one I should.
Listen.
Don't
That-
beat yourself up about it because you
Yeah,
actually a really good
should have
move, a
taken
really
it,
good
but
move.
there
And
are
it's
levels
clear,
to it.
it's clear as well. And it's clear. It doesn't matter how many pips you got at the end, it's still a very clear move. You got your in point and your out point, and you knew when you was getting in, which
Right.
was the bearish order block, to the higher time frame you were getting out of the bullish order block. So that's a really good move. I wish I saw that.
Yeah, I didn't have it marked up. You're the only one that had it marked up. And this
Yeah.
is the thing about trading, man.
Probably has a bunch
Like,
of roll.
everybody is going to have their own vision, and you're going to see different things. Just because I don't see it doesn't make it not a good move. You saw it. It was based on what you know. You traded it. You know, I mean, it's perfect. That's a perfect setup, and it's a perfect move. But and it's a perfect example of why you do your own analysis. It's exactly why I got off that call every day. Because you can't grow if you're always relying on somebody else to break things down for you.
That's true.
You know? And had I never started doing my own stuff, I would have been the same, sitting up waiting on Ruby to break down the market. Waiting on Ruby, right? But chances are Ruby's gonna go start living life. I'm gonna go start living life at some point.
You did.
And you need to be able to break down your own chart. You need to be able to see these moves for yourself. And this, how long have you been doing this, Terrence?
How long have I been doing what?
Analyzing the charts, like doing Forex.
Oh, gotcha. February, I think. For real.
February this year.
Yeah,
Amazing.
I started looking at Ruby stuff December for the second time. So probably a year and a half. I looked a year and a half ago, then I quit until last December. And I started back in December.
This is a huge testament to what it takes to learn. I mean, so you're seeing setups for yourself at this point, a year and a half into it. Imagine where you will be as a trader a year from now, 2 years from now, right? Like, instead of you just seeing this, now you're executing it flawlessly. 2 years from now, you're on a beach somewhere. This hits your area of interest, and you collect all that because you're solid in your analysis. You understand what you're looking for. You're saying, okay, this is a good thing to risk, whatever, right? Like, you don't even sweat those 26 points. It's either going to take your 26 points, or you're gonna 200 some, 300 points out of the trade. And this is not just you, but everybody on the call, right? Like, once you have a setup and you understand how to look at the charts, it's going to be clockwork the way you take your trades, right? And just like I know that if my computer or whatever, if I see a trade set up and my alert goes off, I put the trade in and I don't look at it because I know how my emotions are as the trade unfolds. Okay, I think I can buy this up. So I'll buy it up. Then guess what? It doesn't just go straight up. It shoots down, comes back, it shoots down. So now that position I got in to buy it up, maybe I got in right here, and when it shoots, put me in drawdown, I might get out of that position. Now I lost this unnecessarily chunk. And it's always going to be a chunk because my lot size is going to be huge trying to buy it up, right? So this is why, if you know that you're a bad emotions person, you just get in the trade and you close it out. Don't watch it, because when you watch it, the market makers are still going to make it look like a certain thing. You're still going to go fluctuate in the drawdown, out of drawdown, in the drawdown, out of drawdown. Then once you're up, you're going to be up big. Now you're not up as big. Then this candle is going to open. It's going to take some more of your profit. You might close your trade out. Then boom, you get a 20-point move. So it's important that you understand where you are as a trader. Some people can watch this and maybe their emotions won't take over once they're in profit. But for me, I like to look at my trade. Once I'm in my trade, I want it to hit my TP. You know, I might look every now and then to see where we're at. Maybe I'll move my trail, my stop loss. Maybe I'll move it. But once you start moving that stop loss, you got to understand structure, right? You can't just arbitrarily move your stop loss or the price is going to come back and tap you out. So you have to have structure. You know, once you see this order block, maybe you move your stop loss. Guess what? They would have came back and triggered your stop loss right here and pushed down. So instead of putting your stop loss here, you have to understand that my stop loss needs to go above the wicks, right? These equal highs, your stop loss would have been up here somewhere. Because you would have understood that maybe they're going to come back and take out this liquidity. And they didn't take it out, but this wick came close. So if you had your stop loss right here, and you were in this trade, it would have knocked you out the trade and kept going. Do I have any questions? Do you guys have any questions of Terrence about this setup? Because this Terrence setup. Anybody?
I would just say to Terrence that how he thought that it might go up into the second imbalance or fair value gap. If you think about it's a Friday, and then the overall week has been going bullish. It's a Friday, and price always ends up reversing a little bit on a Friday, and then it's now tapped into your, what is that? Is that an hour or a daily bearish order block that you've already marked up?
Yeah.
So it's just, I'm just adding to your confluence of your setup that, you know, this is going to be a bearish move, and it is going to go to that. Is it a bullish order block that you intended it to go to?
Yeah, the day bullish.
Yeah, so you just got to take into all those into account, and that news came out as well at what was my time? I think it was like 9:45. Yeah, 9:45 New York time, East Standard Time. So there was news as well. So you just got to take all those factors into account of what price is going to do on US 30 and, you know, NAS and SPX, that you've got your bearish order block already marked up. It's Friday, the price has already been running up. It's run up into this fair value gap, which it's mitigated already, and then, you know, it's going to go down. So you just got to add all those all those confluences into your analysis as well. Price could have gone all the way up, which I was expecting it to do, 500 pip move, but like Ted said, it might have been a bit ambitious for that.
Yeah.
But I didn't even see this order block, but I had it marked up as a 50%, but I just couldn't be bothered to scroll across. So if I did, I could have seen that, but that was my woes. But you just gotta, you know, add to your confluence. If you think that this bearish order block is gonna be a downward move, then you gotta, you know, just add to your confluence and go to a lower time frame. Don't be scared of time frames. I've been speaking to people and they're scared of going to different time frames. Today I went on to a 2, 3, and 4 day time frame. Never been on them before, but I needed some confluences of a move when I was back testing, and I got it. So don't be scared of going to different time frames, smaller time frames, especially on US 30, because you're gonna get a good entry on a lower time frame.
Gotcha.
And you could have got in twice as well. If you went down to a lower time frame, you could have got in at the top where Todd said, then again where you got in on the 15-minute, and
yeah,
you know, caught two big moves. Or if you want to add lot size, if you want to add positions, add more positions. But yeah.
Hey, thanks for that. I appreciate that, Todd. I got another question because I don't understand some chalk versus the structure break. Like what is the, I guess, how are you able to point this out so quick, and what should I be looking for? Is it the immediacy of it?
Listen, y'all.
That video.
If you go to YouTube, man, y'all think I'm lying, man, but if you go to this YouTube, and you type in chalk, Forex, you can put Forex strategy or whatever. This video right here, it's like 9 minutes of your life, and it explains it. This is 8 minutes and 13 seconds. It explains it perfectly. And
I'll check it. I'll check it.
yeah, this is exactly what I'm telling you it is. You have a base, rally base. This is your last level, right? Like, since we don't mark up support and resistance anymore, right? But if you did, if you marked up support and resistance, this would have to be a level of support, because you got a rally, you got a base, and then you got a rally. Y'all, you agree with that? Does everybody
Yes, sir.
Yes.
went up here?
Yes.
It leveled out. That's a rally, a base. Now it's a rally, a base, and a rally. So every time you get a rally after a base, that means price broke to a new high. Now it comes up here.
Would you call that exhaustion as well for the market?
Well, you can call it what you want to, but my point is, this base is the important thing. This base,
Okay.
because price went to a new high, it immediately fell past your last low. That's called a change of character. You can't get a new high and then a new low. If it does that, that's the market telling you, hey, we're going to go lower. It's the same thing on the bottom. If you get a new low and then the market gives you a new high, you know that the market is telling you, hey, we're about to go higher. I just need to go tap in to this institutional candle to go higher. It's the same thing right here. And if you think about this, I don't want to confuse everybody, but if you study ITC, ITC will teach you that all of these green candles are an order block, right? Every one of these green candles, the market comes past this order block. Now price is going to tap into that order block and push down, right? But who cares whether you study ICT or not? What chalk tells you is, this is your last space. You have a new high. If you create a new high and immediately create a new low, the market is going to go lower, right? So let's just say you don't understand where to get in. If you get in, if you have you could put a sell limit entry at this base. When price comes back, it's going to tap you in. You go in a little bit of drawdown, put your stop loss above the high. You go into a little drawdown, and every time you're going to win that trade. So if you don't understand where to get in on chalk, but you understand how to identify chalk, this is what your short position could have looked like.
So Todd, just for my clarity, so the break of structure would only be just creating that new high. Would be a break of structure, but creating a new high, then a new low.
The break
would
of
be
structure.
chalk.
That's a good question. The break of structure is you're breaking through this floor, right? New high, the market breaks structure to the downside. This is your structure, this level. You got that? You see that?
Yeah.
So you have a new high, and then we break structure to the bottom. That's saying that we're going to go lower.
It's normally a big push, isn't it, Todd?
Yeah. So when you say a big push, this normally happens back to back. So it's going to require a big push, but maybe it's 4 candles instead of 2 candles, right? So you want it to happen immediately or fast. You don't want this to take 16 candles to break down, right? You want this to be immediate, up, down relatively quickly, 2 or 3 candles, maybe 4, right? But you want it to happen immediately. And what you can do is you can go and back test the same thing, right?
Okay, so finally, so that where you have the crosshair right now,
Right.
that's a break of structure, and the other line to the right, that's the change of character.
Right.
because
So,
it made a new low and then a new high.
so in this case, the market was here. It made a new high first.
Mhm.
The second move is the one you got to pay attention to. If it breaks structure and makes a new low,
Mhm.
that means we're going lower.
Right.
Does that make sense?
Yes.
Yeah.
You have a new high and then a new low.
Mhm.
So you can't, if you have two news, if you have a new high and a new low, the second one is always going to weigh more. If you have a new low and then a new high, then the high is what's more important. The market is going to go higher. Does that make sense?
Yes.
Mhm.
So
You
that's
can
the
see
change
that.
of. Now, I can't stress enough. Go watch that 8-minute video. It's 8 minutes and 13 seconds.
I was just about to say that. I'll go watch the video because it makes a lot of sense, because ICT talks about the same break of BOS, break of structure, just the same as coach, change of character.
Right.
Same thing. But yeah, ICT talks about it. I think Alicia as well talks about it quite a lot. And
Yeah,
Todd's bringing up quite a lot as
that
well.
is,
But it's very useful.
powerful. And once you start seeing it, you'll always see it.
Mm.
You know, before I learned about shock, I would have saw this and didn't think anything. Okay, I just see lower lows. But it's very powerful because it's when the move starts. It's at the very beginning of a move. And it happens on every time frame. Do I have any other questions? Does anybody have any other questions of Terrence? I think this is awesome because
Yes.
it's a setup that he found himself, right? It's
Mhm.
not a setup that I found. It's not a setup that somebody else found. So it's a setup that he found based on his own analysis. And to me, that's everything, you know, because once you start seeing it, it's only a matter of time before you can start executing the trade.
It's powerful. Very powerful.
Okay, that was awesome.
Yes.
Mm.
So let's talk about some of these moves in the market. And you know, coming into today, I wanted to look at some of these moves. So this is what I published in my trading view, right? If you guys notice, like, or have you guys noticed how these JPY pairs are moving? You know,
Yeah.
sometimes I feel like we go to sleep, you know, on the market. Does anybody understand what's going on in the market these days?
I don't trade pairs, so I haven't noticed.
I'm gonna get you a T-shirt that says that.
Okay, so you know, for the people who do trade pairs, who trades JPY?
I did look at it just a minute ago, and it was dropping to a bullish order block from what I could see on the daily.
Do y'all know why though?
Did they raise interest rates?
No.
No?
Japan,
Or they,
Japan hasn't raised not one interest rate the entire time.
so I thought you said that would go up if
Well,
it didn't raise interest rates.
You're right. Normally it does go up, but why is it dropping?
I think the pound must be a crappy currency.
Okay,
Okay.
that's cool. I'll take that too. Why is the euro dropping? The euro just raised the interest rate, didn't it?
Yeah, I think.
Why is the euro dropping?
Maybe COVID cases going up.
War.
All right,
High inflation.
maybe the COVID case is
No,
going.
no energy.
Why is the AUD dropping?
Okay, let me go and have a look.
So any excuse you give me about the AUD, whatever, I'll take it. Why is the NZD dropping? They just raised the interest rate.
Why are they all dropping, man?
Yeah.
Yeah, exactly. Why? I mean, if you trade, if you're trading pairs, you have to understand what's going on. Like, why is everything dropping? This
We're in a
That's a good-
recession. I don't know.
Good
okay,
move that is.
that's
That was
perfect.
a-
That's the best answer I've heard so far. We talked about the news that came out Friday. What news came out Friday?
it's a PMI, I think. US.
Oh, let me check.
Come on, y'all.
We're starting to see some
Hold
cracks
on,
in
one
the
check.
They say it again, Terrence.
economy is showing signs of cracking.
But everybody's economy or just the American?
Yeah.
Well, the
You know
American
what?
economy is the leader. All right.
American leader, big dog.
So if the American economy falters, everybody's economy is going to falter. That's how you have to understand it. The Philly Fed. What is the Philly Fed, Kenya?
The Philly Fed came out on Thursday.
I don't know exactly, but it's got something to do with like manufacturing jobs, and it's
Right.
like a, yeah.
So,
It was minus 12.3%.
yeah, what I want y'all to do, I dropped a educational series. I want to say I'll put it in education.
Yeah, you did.
So
So
that's
what the original question was, why is Japanese peers dropping?
yes, that's the original question. Go
Well,
ahead.
I'm gonna take a shot at it. It's because we're in a recession and persons are gonna put their monies into safe haven currencies.
That's exact. You're 100% correct. So
Oh,
but this is I asked that, and I draw your attention to this because it's cool to be able to trade these charts. This is awesome, but if you're not anticipating, like if you don't understand what news events trigger these sell-offs, you're always going to be the last person to the party. So I want everybody to be on a level playing field when it comes to the trade in the market. You know, if you're not on like you could have saw this daily order block, this daily bearish order block, and you could have got in for this sale if it came back and tapped you in. Right. And in this case, it would have tapped you in.
Mhm.
The most important thing is for you to understand the fundamentals behind these moves, right? The Philly Fed came out, right? If you don't even know what the Philly Fed is, you don't care. You're like, okay, the Philly Fed, whatever. What is the Philly Fed? What does it manufacture and why is it important? Right? Like they don't just have these meetings set up for nothing, right?
It's a leading indicator of the economic health.
Of what? Of the U.S.
Economic health.
Okay.
Of business reacts quickly to the market conditions and changes in their sentiment can be early signals of future economic activity, such as spending, hiring, and investing.
Right. So if for people who don't know, the people feel like we don't produce a lot in America, right?
You don't.
When you think about people that produce, you think China, maybe Vietnam or whatever, like because they make all of our clothes and all this stuff, right? You know, you think of Korea or one of the Asian countries that produce these chips. America's the second leading economic producer, right? Now, if you include the European Union, America's the third, but we're the second biggest economy. China's the first. So people understand that if the American economy falters, the rest of those economies are going to be right behind us, right? So the Philly Fed, this was the first time the Philly Fed has showed cracks, right? Why is that significant? Because we're raising interest rates, right?
Mhm.
The reason why we see these cracks, you know, is probably because we raising the interest rates,
I
right?
mean, everybody's a doctor. I mean, they need to do something to speed that up.
Hey, Sean. Everybody's not a doctor on the call though. But anyway, so the Philly Fed showed cracks for the first time since we raised these interest rates. It's super important because we're going to raise interest rates again. next week or this coming week, right? I know the Fed has been very hawkish on their talk about raising these interest. They've been very aggressive as far as raising interest rates. Canada raised their interest rate a full 1%. We're expected to raise our interest rates another 75 basis points, if not 1%. Now that we've seen cracks in the Philly Fed, are we still prepared to raise these interest rates that high? The Fed says that they are. They at least they've been talking a good game. You know, this is the point that we get to see whether it was all talk or are they about that action. You know, so this will be the first time that we go into an interest rate hike, and the Fed has a little extra pressure of a failing economy in front of them, right? So if you watch that video that I posted in the education, it's actually a series of videos. It will explain all of those reports to you. It explains CPI, it explains PMI, it explains the Philly Fed. It explain every economic report. Now, it's important because every country has an example of the same reports that we do. So if you start to understand these reports, you'll actually start to understand the economic activity on a whole, and it'll make you a better trader. It'll make you anticipate some of these moves. So because these cracks showed up, you have this massive sell-off of the JPYs. Now, this is just the beginning. I expect to be trading the JPYs down south for the foreseeable future based on these economic cracks. I don't think this recession, I mean, this is like we're just getting started. So there are a lot of people out there that are probably trading this like this is a temporary pullback. But in my mind, this pullback is more than temporary, right? So what do we expect to see on a larger scale, like on this daily chart, right? Wouldn't this be awesome if we get some chalk right here?
Change it.
Oh, retrace.
You got a rally base, rally to a new high. The market breaks to the lower point. What do we expect to see anyway?
Retrace.
On this weekly, we expect to see a retrace. This is a bullish order block for the weekly. We expect to see a retrace. So you see this area that I had marked up? Now, I had this area marked up because I really anticipated this candle going back to this area. And it fell short. It didn't come back in here and tap in. It just sold off. It doesn't necessarily mean that this area is out of play, right? What could very well happen is price could retrace. Now, to my brother's point, if I just put a fib from this move down to way down here, look at this crap. You can't make this up. This is a 78.6. Hey, this is an area that I have marked up for a move that never came to fruition, not yet, right? So based on what I already had marked up, when I throw the fib on this, I'm like, well, I'll be darned. The market might just come right to me because I'm patient, because I did my homework. Whenever you was out getting a drink with your buddies or whatever it is that you do, right? And I'm not knocking that all of us live our lives, but all I'm saying is, wouldn't it be awesome if the market came right back to my area of interest? Because I had an area of interest for one, because I did a little homework, you know, trying to find an entry for the sell down, right? The patient trader gets paid. wouldn't it be awesome if this chalk sets up right in front of my face? This would be chalk. The market has a new high, it immediately breaks it. The market is going to come back to my area, the institutional candle, which is my area of interest. And I'm going to take this sell down and make all these pips because I anticipated the move. I anticipated the move because I actually looked at the charts for myself. I did homework for myself.
Mhm.
That's why I wanted to talk to you guys about this today, because when I introduced these concepts, you know, a while back, it was just, hey, the market is going to create an order block. You just wait to get tapped into the trade and ride the order block to the next order block, right? Y'all remember that? Then it was, hey, you get a break of structure. You wait until the price pulls back to your area of interest. You take the trade to equal lows or equal highs, right? So as you can see, the concepts, like once you start understanding these concepts, you can add a little bit more to it. You can add a little bit more to it, right? And this will give you a well-developed trading plan, right? Now you no longer are waiting or reacting to moves. Now you're anticipating the move, right? Now you can go and hide out. You know how they hunt prey like deer or rabbit? You ever been hunting? You go and you pick an area that either the deer eats or these animals feed, and you camouflage yourself and you get up into a little booth or whatever, and you wait for the animal to show up. You don't just walk through the forest hoping you'll see an animal. So now we're the same way. We're predators, right? You want to be an apex predator when you go to the market. You want these moves to set up in front of your face. You want to understand the fundamentals so you can set yourself up for the trade. This is how you get paid as a trader. You don't get paid reacting all the time. Sometimes you can catch a good reactionary trade, but the real money comes in when you're anticipating and you're understanding. You have a full understanding of where your setups may happen based on the information that's being put out there. So what I did this morning, because I understood that the Philly Fed was coming out, all this stuff, I got on my phone and I Googled Evergrande. Well, guess what happened? Y'all remember Evergrande?
I remember hearing something about it. Yeah.
That was that Chinese mortgage company that like went
Real estate, yeah.
thing, yeah.
Have y'all been keeping up with Evergrande?
And what's Evergrande?
I haven't been keeping up with it,
What's
but I heard of it.
So yeah, so Evergrande is the largest real estate company in the world, right? They defaulted on a loan.
Right.
Yes.
Chinese government did not bail them out like we would have bailed them out as the US. We would have made the people pay for that. But the Chinese government did not. And they had to sell, you know, basically the CEO had to sell all of his shares, basically. They bankrupted the CEO. And they just this week they kicked the CEO and the CFO out of the company. They fired them.
Oh, wow.
Because they defaulted on that money. But those types of things are going to I guess start dictating the move in the market. We haven't heard anything because we had a feel-good moment. You know, the US economy was cranking. Everybody was making money. The dollar was, you know, super strong. And now all of a sudden we get this knee-jerk reaction to the Philly Fed. You know, I've been on this call for at least a month talking about recession, right? I didn't know that the Philly Fed was going to be as bad as it was, right? But I knew that at some point we were going to see the effects of raising the interest rates. Now, maybe I should have known that it was going to be that bad when we raised our interest rates 75 basis points. But it was pretty bad. It gave all of us an opportunity to trade massive moves. The dollar faltered, so look at gold. If you're a gold trader, all types of money to be made in gold. Gold went from 1681 to 1740 in 2 days. So if you could have caught gold at its low and traded it up to this order block, you'd have made a fortune. So now that we know what's going on and the dollar has faltered, now you can start looking to trade gold back up. And look at all this liquidity imbalance. Got another imbalance here. Like gold is going to start making its return to the same. These are just things that you can look at as a trader, and you can anticipate these moves up. All of this stuff is happening. All of this opportunity is here. All you have to do is trade. I think last week we talked about oil trading down to 60 bucks, right? It's a recession, oil is going down. I read an article, I want to say 2 weeks ago, that said you should short oil. Last time oil was $110 a barrel, it cracked. I mean, it fell all the way down to 60. So I anticipated it. This is what they were talking about. Last time oil was that high, it fell straight down. Now, I don't know if it's going to fall straight down again, but that guy was sure that it was going to fall straight down. He was sure. And what he was saying was, you know, the same way that we're talking to Terrence about taking that 20 points, that 20-point risk. What he was saying was that this risk was set up so much in our favor that it was worth mortgaging our future in order to change our lives by selling gold down to $60. That's basically what that article was saying. Now, I didn't take heed to the article, but I darn sure wish that I would have, started trading oil down right here whenever that article came out. Because that guy was sure the oil is going to go to $60 in a hurry. Now, I think oil is in a good spot to come back up. Like this area is an area that I had marked out kind of the same way that I do in that JPY trade. If you look at this, you get a break of structure to the upside and a break of structure to the downside. This is a weekly chart, so it's going to take a little bit longer to develop, but you get a new high. It broke this high right here. Now we're breaking structure to the bottom side. This just needs to come back up and trade into my zone. And I'm telling you, I'm going to trade me some oil down to the south if that happens, because this would be life-changing type of money when you trade this oil CFD down. It's just the trade idea, guys. Like, I don't trade oil, but if it comes back into this area, I'm going to be an oil trading some again, because I believe in it. And I remember Ruby telling us she made 40 grand on oil in 1 month. I don't know if you guys were in LLA then, but she told me that was her first big trade, was making $40,000 trading oil. And that was when oil went to zero. So there are tons of moves that are out there that we can take advantage of going forward. We can trade the JPYs to the downside. We can trade oil to the downside. We can trade gold to the upside in a recession, and the dollar will start falling, right?
Um, Todd, while you're explaining that, the VIXI, is that used for the same concept of checking, gauging what the risks?
Well, you know, really the Dixie is more of a reflection between the US and the euro currency. You know,
Okay.
the Dixie is the dollar index, but there's a better way for you there's a better index for the dollar. There's an index for every currency. You know, I don't know if you guys know or not, but if you want that index, there's a way you can go in and get you an index for every currency. Pips of Persia, if you go in and type in currency index, Pips of Persia has a video that he did on it, and Cleveland also, you know, has some indexes, and there's a formula you can put in, much like an Excel formula, that will give you clean indexes like that, the dollar versus every other currency, not just the euro. So, but the euro and the dollar, and this is a great way to trade the euro, like the EU, right? But when you see the bearish order block, you have to have an understanding of where you expect this price to push down to. And yeah, this is a retracement, but at some point it's going to turn into just a sell-off, right? And at that point, you know, it'll probably be because we're either not raising interest rates, you know, to the level of expectation, or we're cutting interest rates. And I think last week we talked about in an article that said there was already I guess projecting or predicting when we would start cutting interest rates. Did we talk about that last week?
Yes.
Yeah.
I wasn't here when I watched it back. Read.
Yeah. So there, like me and you didn't anticipate I guess the Philly Fed report being as bad, but I'm sure there are experts out there that knew already, or that anticipated that report was going to be bad, because those same guys wrote that we're going to be cutting interest rates the second quarter of next year. So, you know, this recession is going to get worse and worse, right? Hopefully, if you're not profitable or if you're struggling, you'll gain some insight, and you can anticipate some of these setups and take these trades and make you some extra cash. Because really, the reason why we meet and the reason why we trade is to give ourselves, you know, I guess a financial advantage, but to give us extra time, extra money, and, you know, we might end up having to support, you know, more than our immediate family, you know, in these types of times. So however you want to get your information, you know, whether you attend this call, whether you trade with Will, whether you're in altcoins chat, you know, whether you do A and B, whether you're with Justin, you know, it's very important that you start putting together things that work for you. And you start doing some studying, and you start developing your trading plan. Whenever I did my initial trading plan, I thought that was it. You know, I didn't understand that, you know, as you evolve as a trader, your plan will evolve, right? There are all sorts of things that you can incorporate in your trading plan. And as you develop as a trader, you'll start to understand which trades pan out better for you. You know, some people are only interested in sales. Some people are only interested in chalk. Some people are only interested in order block setups. And there's nothing wrong with any of that, right? You might just be an imbalanced trader. You might trade, you know, retracements. Nothing is wrong with any of that. But you need to know what it is that you're looking for one, and how to trade it for two, right? If you're an imbalanced trader, or if you're a retracement trader, you would have caught this entire leg, right, of the Dixie. And what I mean by that is maybe you saw this trade develop. Maybe you waited, you saw this weekly order block. You waited this week and this week. Now you see the wick pulling back, right? Once you see the wick on this candle, you'll understand that you can start getting in for a retracement trade. Maybe your entry was somewhere on this wick, right? Maybe you missed that entire wick. You didn't get into the trade until this week when the market pulled back. But as a retracement trader, as soon as you see that wick developing, you have to drop down time frames to try to get you an entry to sell. And maybe your take profits are these key levels, the 23%, the 38.2, the 50. Whatever, however you want to trade, or whatever type of trader you are, you have to develop that plan and you have to write it down. If you don't write it down, you're going to forget, you're going to skip a step, you're going to miss opportunity because you don't have it written down and you're not as familiar with it as you think, right? Whenever the market is not moving and you're sitting by yourself and you're thinking, you're very calm, you know, everything is very clear. But the minute the market opens, the minute you feel a little pressure, things aren't as clear as you thought they were, right? Before we started having these meetings, maybe you didn't understand the significance of those JPY pairs, right? Maybe you didn't understand why the pairs were behaving the way they were behaving. But now going forward, hopefully you'll never forget, you know, like hopefully when you see all the JPY pairs doing the same thing, you're like, okay, something's up, right? Something is going on. Because I remember that these things only sell if the economies are doing great. I remember these things only buy if, you know, the economies are doing bad, you know. So just put this type of information in your toolkit, and whatever pairs that you're trading, have an understanding of what moves them up or down, right? Once you have that understanding and you put it together with the fundamental news, you can go to the market and you can look and you can anticipate pairs doing a certain thing. So let's talk about the US dollar. What do we anticipate from the dollar this week? Felicia, what do we anticipate from the dollar? What pair, what's your pair anyway, Felicia?
NU, but I haven't analyzed it.
Okay, but so let's talk about NU. Anybody, do we expect the dollar to go up or down? We look at the index. Do we expect the dollar to go up or down?
You already said
Down.
down.
Okay. The dollar's going down. So that means NU should go up, right?
Correct.
That means GU, EU, AU, all should be buying, right? Now, when you look at these charts, you can anticipate that it needs to buy up anyway, right? The last move was here. It impulsed down. It's been showing you exhaustion. This last week was a hammer. We should have anticipated buying up anyway. But here's our zone. It's probably going to come way up here to the 78.6. But it needs to anyway because we broke structure, right? So wouldn't it make sense that they close this imbalance? There's an imbalance right here. So if nothing else, you can anticipate maybe price pushing to this order block. Maybe you can get you a nice buy of, I don't know, how many pips is this? Maybe you get a 300 pip move this week, 250 pip move. These are these are moves that any one of us on this call can not only anticipate, but we can set the trades up, right? Based on the fundamentals of the dollar. We understand that the dollar is losing value. The Philly Fed had a bad report, recession looms. So until we raise interest rates, this market is probably going to run up. When do we raise interest rate?
Thursday at 7
Yeah, I
p.m.
thought you.
Go ahead, Terrence. You thought I would?
I was just wondering how the interest rate hike, which we anticipate this week, is going to influence the dollar movement.
Well, maybe this push happens before Thursday. Maybe you get those 300 pips Thursday. Maybe we raise the interest rates and it pushes back down. I can see a case for that to happen. None of us know that exact information because we're not on the inside. Like we don't have any access to the algorithm. We don't have any access to how much they're going to raise interest rates. But here, why don't we just paint this picture? For the first 3 days, price pushes up. Let's say we raise interest rates 75 basis points and price pushes down, right? Or we raise interest rate 50 basis points, which is not as much as we should. So price pushes down initially, but it gives us a higher low. And people, it just shows you the dissatisfaction about the way we raise interest rates. So now price pushes further up, and now NU is on the rise instead of on the sell. Doesn't it all fit together? Like it's the same thing. It doesn't matter. You can see a case either way, right? Either we rise up, get to this area, we raise interest rates and we break to a new low, or we rise up, we raise interest rates, we get an initial push down and we keep going up because either the interest rate hike wasn't good enough or the US economy is just faltering, right? Now you have a swing low. You have a low here, and now you have a higher low. It's going to be either or, right? Does everybody understand that?
Yes.
Yep.
So
Yes.
I guess what I'm trying to say is it doesn't really matter what the results are at this point. What we have to have an understanding of is the opportunity to trade this up probably outweighs everything at this point. We just traded up. Maybe you get out of the trade before they raise the interest rates, right? Or maybe you protect your stop loss. They're gonna wick you out of the trade anyway if you bring your stop loss because they're gonna clear liquidity. So you just wait, but you don't miss the opportunity to trade a couple of hundred pips. AU is going to be the same thing. All of these,
It's a 7 p.m. on Wednesday. 7 p.m. on Wednesday. Well, let me check.
7 p.m. your time.
Yeah. 1 second. (1 p.m.) Eastern Standard Time.
Wait.
Is it
So-
12 p.m. over there at the moment?
Sure.
Is it 12 p.m. right
Yeah,
now?
it is. It's 12 p.m. here in Texas.
Yes, it would
1
be
in New York.
1 p.m.
Yep. So this time Wednesday. So I mean, these trade setups are out there. We can trade the dollar to the downside, starting the week off until the interest rate decision, and then we have to play it by ear. We can trade the JPYs to the downside. All of those setups are out there for our liking. Now, because I have Kenya on the call, we look at her favorite pair, EA. So here's an example of a pair that went to our area, right to our area. This is kind of a trade set up like Terrence had. This one went 24 pips past the trigger, right? And I didn't get in this trade on the trigger either. But the point is, this was a trade that was highly anticipated, and it did exactly what I thought it would do, right? We kind of misplayed the trade, but here's my point. That trade happened 3 weeks ago. And, you know, to my brother's credit, he said it's like watching paint dry. But 3 weeks ago, we could have entered a trade and caught 730 pips. Right? Now, 730 pips is significant because because it's a trade that was anticipated based on this push down. We knew the price needed to come back, pull back to our zone, right? This blue box was the zone that I expected the trade to pull back to. Right? I dropped down and I found the entry or found the area of emphasis in 24 pips in drawdown, and we got this huge push. I'm bringing this up because I'm trying to show you that by doing your homework, the same way Terrence talked us through his trade setup, we have the same exact things going on the trades coming into the week. I just showed you a UJ setup that's probably going to end up playing out, right? We just talked about an AU setup. We just, you know, GU is the same thing. And it's funny because I've been looking at Justin's chat, and I guess his bot, you know, made a bunch of money on GU this week or whatever. But all of these setups are the same thing. This doesn't have the order block play that the other one does because the British pound is such a crappy currency, right? But still, it's going to do the same thing. You're going to watch this start to push up to the upside. EU, GU. There really should be no excuse on why you can't find a setup to make you money this coming week. Does anybody have any questions? We talked about gold. We talked about oil. We talked about the dollar. We talked about the JPY. What else do you guys trade that we didn't talk about? So let's just say you trade EA or GA or GN or whatever you're trading. If you've been trading GA, you've only had the opportunity to trade it to the downside. There's no way you should have been trading this to the upside, right? You get on the daily, you can get on the weekly. It's all telling you the same thing. It's been trading down, right? This has been trading down pretty much since the war. If you're trading any other pair, or if this goes for any pair that you're trading, when you see these order blocks on the higher time frame, like if I see this weekly sell order block and I wasn't able to get in for this sell, I can anticipate that for the next several weeks, the price is going to push in that direction. So all I would have to do is find an entry on a lower time frame. Here's a daily. Here's a 12-hour. Any one of these lower time frames could have given me an entry to ride this trade down to the lower side, you know, but you just have to be patient as a trader, right? If you see this order block and you set your alert, you didn't get this order block until 12, 24, you know, maybe 2 days later, your alert triggered and you got into this trade, right? But you would have had to be patient after you got into the trade because they would have dilly-dally around before it eventually dropped off. So just understand that you have to be patient. You have to trust your setup. You know, once you see your setup, take your setup, have entry criteria. Once you're in the trade, you let the trade run to your either your take profit or your stop loss. Any questions?
I just want to confirm or hear confirmation from you. Since we said,
No, go ahead. Go ahead.
you said oil is going down, that means Canadian dollar should be going down as well, correct? If it's in the base rather than on the quote. Is that correct?
That is correct. What are you trading with the Canadian dollar?
I am in CATCHF.
Well, I think that has two reasons to start going down, but it doesn't mean it's going down next week. But yeah, this is exactly what happened. Were you in it for the buy?
Nope. That's what we had, we had, I think it was with Kim on Thursday or on, yeah, I think Wednesday or Thursday. Because I had it in as a buy also kind of like this.
Right.
From
But
previously.
it failed
And
to
then,
break this high.
yes, and then we actually analyzed AUD CAD, which was going up. And then I was like, hold on, if AUD CAD is going up, then CAD Chef can't be going down. I mean, can be going up too.
Right.
Okay, yes.
Well, they were both going up. But anytime you're in a recession, what's going to happen? Or when there's worry that's introduced into the market, what's going to happen?
Consolidation or ranging.
Chef is going to get strong. The JPY is going to get strong. The dollar will be the third one that is a safe currency during a recession. But you're going to see the dollar drop because it's way too high right now.
Okay. Thank you.
You're welcome. So hopefully you guys feel confident. Monk, are you good? Hey, Monk. Don't let the bot do all your trading. I mean, you can let it do your trading, Monk, but I want you to be able to understand what you're seeing on them charts. Is Monk still in here?
Yeah, I'm sorry. I'm here. I've been on and off. I'm sorry.
That's all good.
Yeah.
It's nothing wrong with the bot or allowing the bot to trade, but you want to learn how to trade.
Oh yeah, I'm learning. I don't even thought is like on its own. I do my own analysis. You know, I'm still in AJ, right?
You still in what?
AJ, that's what I'm trading,
Oh,
AJ.
AJ, okay.
I'm still doing it, and it's actually selling. So it's actually like doing what it's supposed to do.
Okay, awesome.
Todd, I have a question.
Okay.
When you're, okay, I'm getting like familiar with the order blocks and the fair value gaps. Do you suggest doing them both at the same time, or is it just better to just do order blocks? Or, I mean, I know you touched on, you said it just a little while ago, but is it better to, can you combine them both?
You can combine them, but I think it's important to look at the direction and you're looking for something. You're not just going to go on the chart and find every fair value gap or find every order block, right? You are looking that you have to have an area of interest. All right. And I want you to keep this in mind. We're going to go look at EF because Kenya wants to look at EF. I don't know why Kenya wants to look at EF, but we're going to look at EF anyway. But we'll talk about order blocks and imbalance. Euro Chef. Okay. we're looking at EF. Kenya, I'm assuming you wanted to look at EF for a reason. This unbeknownst to any of us. A while ago, it broke structure. It went back right to the area that we had identified and sold off, right? We expect this to keep pushing down because it's a recession. Now, let's talk about order blocks and imbalances. EF has been pushing down for 1, 2, 3, 4, 5, 6 weeks. We just broke structure again, right?
Right.
Follow me, Barbara?
Yes,
So,
that's it.
at some point, EF needs to retrace, right?
Right.
Now, I don't see wicks at the bottom. So I'm not going to anticipate that we get a significant retracement. But I have this last green area marked out because that's the lows, you know, it's around the lows of this market. So at some point, let's say EF goes another, this is a lot of pips. Oh, that's only 70. So let's say it goes another 100 pips, Barbara. Takes out the liquidity at the bottom of that market. Then I expect to see a decent retracement. And when I say a decent retracement, I'm going to throw the fib on this from the top of the wick on this red candle. Let's anticipate this area down here being the low. And now I'm going to delete some of these green lines. Now we would have to anticipate price pushing up into the golden zone, right?
Right.
Now, because this move broke structure, I would anticipate the price moving somewhere in this institutional candle. And there's a imbalance right here. Y'all see the imbalance?
Yes, I see it.
Which is why this would be important. There's an order block in my zone right here. I will highlight this area too, right? Now it's important to keep in mind that this is a weekly chart. So maybe price pushes up, taps into that order block, comes back, gives me a higher low, and then goes into the zone, right? So you see why both the order block and the imbalance are important.
Yes, now I see it. Yes.
Right. And for the people who saying this is not an order block, what I'm doing is I see a wick here, so I know that if I drop down, I'm going to get an order block, right? And in this case, it's on a daily, but I could keep dropping down and you can get a regular order block at this level.
Okay.
This imbalance is a lot higher on the 12-hour. It's a lot bigger area. So what you would do is measure to get the middle of this imbalance, and that would be another place that you can anticipate the market going to. Now, we can't even talk about this imbalance. We can identify it, but we can't really talk about it before the market even gets up to this order block.
To the order block. Okay.
So if you're trading this thing up, the first thing you're going to do is say, okay, there's an imbalance right here.
Right there. I see that.
That was your first point. So maybe it touches the imbalance, you take your profit, it reacts. It comes down and gives you a low. And maybe it goes up and taps into your order block, the area you've already had identified. Maybe you take profit again. The market pushes down.
Right.
Then maybe it goes up to mitigate the middle of this huge imbalance. Does that make sense?
Oh yeah, no, it does.
So they're both important, but I guess it just takes time. You have to understand where you're trading the market to at that particular time.
Okay. Okay, gotcha. Thank you. It makes a lot of sense.
And
And they're both
okay. Did I answer your question on, or did you, is that what you anticipate from Euro Chef, Kenya?
Well, so I was talking to my husband about it and we were trying to figure out, is it still going to keep selling or is it going to retrace? And I pretty much said what you said, which was it needs to retrace, but it's not showing signs of that retracement yet. So I can't mess with this one.
Well, I think you can trade it to this low. I think that's where it's going. I mean, that's the reason I had it marked up anyway. And again, as long as it's selling and respecting your analysis, that's the important part, right? Not necessarily my analysis, but what you can do is you can go and analyze for yourself where the next low is. So maybe, this low is important to you. Maybe this low is important to you. I figured it would break the lowest low, and then it would go back up. Now, I'm not trading Euro Chef right now because to me, there are easier trade setups. But if you and your husband are trading it and it's respecting your analysis, then trade it. Who am I to tell you where to go to get your money? All I'm saying is, like if your husband is comfortable with this thing dropping like it's supposed to, and it's been doing, then cool, get paid. I think that it'll push to this area before it pulls back up. Now, maybe it'll push just shy of it and pull back up. I don't know, but chances are it will take out the lows before it goes back up.
I think he is selling it, and that's why we couldn't agree. Because I'm looking for the buy, but he couldn't find his TP. So this has helped.
Right. I would always use those lows. Like it's actually two lows. So he can TP it either, or he can just kind of watch it as, maybe set an alert that will tell him. I'm a fan of TPing, safely, other than watching my profits go back. But it is what it is.
Same.
What was the other pair you said look at?
NZD Chef and then EuroCAD.
NZD Chef is probably going to be similar to this one. NZD Chef. Yeah. We paid. Yeah, it's pretty similar. So this is why I say TP, because you see how the price comes down and takes out this low. You see the bounce that you get after it takes out the low. So I think this one is going to keep pushing down probably to this next low. Is that what you got?
He's got 6225. Where is that?
You think it's going to go to
Oh,
6?
no, he's got it buying. I'm looking at it now. He's got it buying.
Well,
I don't know why he's got it buying, but he's got it buying.
Because it was buying. You see it has higher lows, but this is an overall sell. And if you look at this retracement, I didn't even do the retracement on it, but as long as it retraced to your zone, well, it didn't quite make it to the zone. Okay, so this is where I had this. See that red line? This is where I had the price coming back to, but it didn't quite make it. So maybe it'll sell down and go up. But if it breaks this low, which I think it will, Barbara might say it needs to break this low. I mean, not Barbara, Kim. Kim might say it needs to break this low. I don't know. So if I were you, maybe you can screenshot this, or you can remember this and get with old Kim when y'all analyze this. But
wait a minute, what'd you say? I'm sorry, I didn't
Kim, you wanna-
put it out.
So Kevin, what I was saying is I think this is gonna sell if it breaks this low. I'm saying
Uh-huh.
you might say it needs to break this low before you would say it's selling. But basically this, to me, price fell, right? It hit this bottom at retrace. It didn't quite get to the level I thought it was going to. This is a red line that I had marked up. It came close, but then now it's selling again. So I think it's going to continue to sell, you know, maybe into this order block, right? It's going to attack these new lows.
Yeah, I think it's selling down to the well, you think it's sell right now?
Well, I don't, I mean, I don't see it coming unless it double bottoms here and comes back up. I mean, you know, there's all sorts of scenarios. My point is,
Because you were on the daily, just a few minutes ago.
yeah.
So you don't think it's gonna come wipe out the liquidity on the top, the triple top?
To take this out.
Uh-huh. And then maybe drop, and then maybe drop down.
You know, when it comes back, when it buys up to the order block or whatever, it very well could. I mean, it could wick up here. It hit my spot. I mean, all of that is viable. But what I'm saying is, it's gonna sell. It's selling like however far it comes back up when it retraces. I think that's gonna be it. I don't think it's gonna keep pushing to the upside. I really thought like this red line was my area of where it was going to buy up to before it sold. It bought up here close to it. It didn't make it and it started selling. It broke these lows, which tells me that it wants to push down. I just think it's going to keep pushing down. What Kenya is saying is, I think her and her husband, or maybe her husband, feels like it's going to keep going up.
Yeah, I don't think it's gonna go all. I mean, it may go up to that order block to the left on the 12-hour, but I don't. Yeah, but I don't think it's gonna.
I mean, if it gets to this line, it's had a fair retracement.
Yeah, I agree. But I do believe it's gonna sell back down to because of the you gotta squeeze it in. Into the go back to the weekly. Because the expansion started down. The expansion started, but I think it's going to sell down to, okay, move to the left, yeah, somewhere around there. But the expansion started right there.
Oh, you mean that? Okay, so did you feel this move right here?
That would be, that would be the
recession move, pandemic move. TikTok and get that.
Thank God.
Yeah, you could either fit there or, but see where the expansion started, the initial push.
Right here or right here?
Right there. The second one you pointed to.
This one.
But yeah, but both, I mean, it's all one and the same, but where that big push happened, that's where I think it's coming back to.
Most definitely. And the fundamentals support this. Chef will get stronger as we continue this the recession.
Okay, I'm confused. Why are you fibbing from way back there?
92.96.
Because that's where the market went up.
92.96.
You don't agree with that?
I see. I mean,
wouldn't you agree that if I wanted to fib this impulse move, I would fib it from this wick to this wick. The market went from right here to right here, did it not?
I agree with that, but I would not have went to the monthly to go and fib all of that. That's my, I'm just
I
asking
went to the monthly
why.
because you didn't agree with, I did it on the weekly and you didn't agree with it.
When did I just asked, why would you do that?
Well, I
I
want to
said
do it.
disagree.
Okay, so I did it because I want, the market is fractal. It's going to do the same thing on every time frame. So if the market goes from here to here, I can expect for it to pull back at least to my golden zone, maybe even the 78.6. Do you agree with that?
Mm-hmm.
So that's why I'm interested to see where we're at on the retracement.
Okay.
AJ. Okay, I think we had one more look at
Yeah, I had EC.
EuroCAD. Your guess is as good as anybody's on EuroCAD. Are you buying it? Huh?
Kinda, yeah.
No. Hey, y'all see the dilemma here? I don't know what you're talking about, kinda.
Well, I mean, based on what we talked about this morning,
Well,
XXX cat should be.
before we talked about it, were you buying it?
I'm trying to. Yeah, my husband had it buying, so I'm gonna say we're a team. Yeah, we had it buying.
Hey, hey, your husband ain't say y'all was a team. He said,
Right, right answer, Kenya, right
oh my God. That's
But I think I wrote down in my notes that Euro XXX pairs. I didn't write that down, but with CAD being on the back end of this, then it should be
Bye. Yeah.
well, so all right. That in a vacuum, you're correct. But this is not a vacuum.
right.
So these factors are going to fluctuate. The euro raised their interest rate, right? That's a good sign. But there's still a war there, right? The Canadian dollar is based on oil. Oil is dropping, but oil can rebound. Like, we have oil going back up to $106 before it actually sells off. So you're going to see some fluctuation in price. So I think that's important to understand as you trade this, right? And I look at stuff from a long term, like from a swing trader standpoint. If you're scalping or if you're trading a 4-hour chart, then maybe you need to look at it a little bit differently. All right, do y'all understand that?
Mm-hmm.
Okay, so EuroCAD, if I put the fib on it, it's right at the 78.6.
Yeah, that's on the monthly. Can you drop down to like the daily?
Let me gloat a little bit, man.
Oh, go ahead.
This is a monthly, but still, this is from a long time ago. The market went up.
Okay, when we
Like,
get
from 2012.
you have the little cord. Why was it on those?
You're catching a move. You validated a move from 2012. If you had an entry on the 78.6, man, you're
Is that month?
Yeah. Oh, God, I'm sorry.
right now. If you had caught that move, you'll be up 203 pips. Then your husband will say y'all on the same team because you making that money. Right now, I don't know if he think y'all on the same team. Let me
Yes,
see.
he claims me as his teammate. Thank you.
Okay, this week you good then. All right. Man, this is beautiful.
That's what I like. So when you look at the weekly and then you look at the daily, it looks more and more promising that it's a buy. And so there was something specifically I wanted to look at on the daily when you
Man,
get
what do you? This is a buy. We already talked about this. I gave this to you. Come on, man. All right.
well, when you first pulled it up, you said your guess is as good as mine. So sorry, I missed the
Well,
switch over
listen,
to the confidence.
I gave this trade idea out like a while back because we had the chalk. But what I meant by your guess is as good as mine is you're gonna have fluctuation. Right? I anticipate this going way back up here, you know, but this is not gonna be a next week we're hitting TP trade, I don't think. Were you on the call? Like you got this markup?
I don't. But I will now.
Oh Lord. Does anybody remember this? Like how long ago was this? Let me see if I go to trade ideas.
Oh, you posted this?
Yeah, this was
So Todd, you post your trade ideas. Like, how long are they valid? Like, they're just valid forever until they're invalid. Like, I'm
it's
just
either gonna
keep
hit, it's gonna
checking
hit
them.
take profit or stop loss. You see this right here?
No, I don't see anything but the
Oh.
original screen.
EC long.
Oh yeah, I guess that might have been one of the days I was in my feelings. That was last week, wasn't it?
17.
Yeah, that's a little
So
recent.
this explains it. We had a break of structure. And then we had chalk on the 4 hour. The 4 hour setup. Now, and this is exactly what I mean when I say anticipate, we can anticipate the market based on the concepts, right? So I found this trade setup when I was perusing the 4 hour chart, but it was because I saw this daily order block. The daily order block was in the area of interest, but oh, by the way, remember we talked about,
you're in a different screen at the moment.
oh, yeah. I don't know why. I hate that this doesn't switch screens with me.
You have to put it on like your desktop screen.
It is my desktop, but it doesn't, Discord doesn't, I don't know why it won't let me share Discord without me actually clicking on it.
Okay, sorry, I apologize.
So the 100, but the reason why I even saw this trade is because ICT talks about the daily wicks, right? If you get a wick on the daily chart, right? If they wick a low on the daily chart, you can expect the market to cascade the opposite direction. There's no reason for this price to wick other than to take out recent lows, right? Or this most recent low. This is April 15th, 2015, so that's not recent. But the market stopped up here. There was no need. Why did the wick go down there? The market stopped way up here. This is the bottom of the market. There's no need for this wick other than to take out that low. So that's what drew my attention to this trade, because you know I don't care about the 4 hour chart. Like people who I'm not on that 4 hour level. I like trading the daily. But
so for clarity, the wick was there when you glanced at the chart.
Yes.
Okay.
Yes. When I looked at the chart, I saw the wick. So my attention was on the trade. I didn't say anything to anybody about the trade yet. The next day, we get this explosive move, and I was like, God, dog. I should have said something yesterday, right? But I think I did say something to you guys. What day is July 14th? I know it's Selena's birthday, but
it was Thursday, or it was a Wednesday.
Wednesday. So Tuesday, I was on the call with y'all, and I didn't bring this up, right? The next day it shot up like, man, I should have brought that up, right?
It was a Thursday.
But what happened was all I did was wait because I know the market comes back to the 78.6. So I think
So we missed it because we was having happy hour.
no,
That's
you
what
didn't.
You're right. We need happy birthday, Selena.
Yeah, but y'all didn't really miss it. So I thought that the market.
No, I mean the wick, at least the wick, I'm saying.
Oh yeah, y'all don't know what y'all was doing. But when I anticipated the market would come down here, but there was an order block right here, right?
Mhm.
So that's why my entry was the order block, but I made sure the stop loss covered past the 78.6.
Mhm.
This was the entire reason why the stop loss was this big, was 50 pips, 47 pips, because ITC always talks about once you get this move, it picks you up at the optimal trade entry. But I needed to drop down for confirmation. So on the 17th, I dropped it in the trade idea. You saw that I saw the market. I think it was right around here when I dropped that trade idea from the 4-hour chart. But I saw this chalk. I saw this break of structure. The market broke structure to the downside, and immediately it shot up. Once I saw that, I already knew. And all I had to do was zero in on my entry. So this was my entry right here, this green line, because this was the imbalance in the institutional candle.
So, so does it look like it's Y-coughing? Do you think it's going to come back down to the entry, to the order block down there past the 78? Because it looked like it's Y-coughing.
Let me see. Let me go to our time frame. I don't really deal with this 4-hour chart. I don't think that it's coming back down. I think you had an impulse move up. I think it pulled back. And I think it's going to go up. So maybe when the market opens, this will feel an imbalance somewhere in this wick. But I don't think it'll come way back down here now. I think this wick is in play. Let's look at the wick on the 2-hour.
I think it's going to give you another entry, but not as good as that original entry. That's
Right.
typically.
So I think this imbalance is probably in play. You see that?
Mm-hmm.
So I think this would be your probably
Retest that break of structure. Okay.
right.
Okay.
It's going to be like similar to Terrence's move on the US 30. He missed that original great entry, but it gave him another one. This will do something similar.
Yeah, so maybe if you put a fib from here to what there's really not a pull. I guess you can fib this pullback. Let me see. Yeah, so this entry would be in your zone.
Mm-hmm.
This is really powerful stuff when you start thinking about it, because if you look at this original move with this green line that I had for an entry, look at the drawdown, man. Like 4 pips. 10 pips. 10 pips. 10.1 pip drawdown. That's crazy. Pip drawdown and 132 pip gain. But y'all got me fooling around on that US 30 waiting on a move that never showed up.
That's spot on. That's spot on.
Yeah. I mean,
so did you get into for this trade?
I was just gonna ask.
No, I didn't. I didn't get into the trade.
What did you set an alert?
Well, I did, but I was trading the US 30 with this girl
Okay, so this one, you actually put it in the trade ideas, you set it up, you got
Well,
an
I
alert.
did.
You
Listen,
did not get into your own trade idea?
Well,
Exactly.
listen,
Excuse me, which girl?
there's a lot of, and I analyze a lot of pairs that I don't get in. I mean, you have to kind of get into the one or the two that that you weigh, right? Like you weigh them out. I mean,
But
I
this
was
one give you the wick and you found the wick?
well. Hold on, I see a lot of this. Just like I did the UJ trade. I see the UJ trade. I'm gonna have to make a decision on which two trades that I take. Guys, I would love to trade 30 pair, you know, I would love to, but the reality is we can't do it like that. I mean, you can, but you're going to lose some accounts. You either want to keep your account or you don't. There's always going to be trades that play out that you can't be involved in because you're involved in another trade setup. You know, I thought that the US 30 was going to give me $20,000. I listen, if you at the beginning of the week, there's nobody who could have told me that I wasn't going to make $20,000 on US 30 this week.
Excuse me, but which girl told you to be on US 30 that day?
I don't know, some girl
Who?
accent, you know.
Stop it.
Who?
He lives across the pond.
I did not force you to
Hey,
say that
you know,
day.
now we talk about words like force. You know, this is a play on words, but you know, somebody encouraged me to trade the US 30 with them, you know.
Well, let me just show you something. If you click on alerts where it has replay, click on it. Yes,
Okay.
click on it.
Where, right here?
No, where it has replay, right at the top. Yeah, there you go. Lovely. And then if you go into value and those.
Well, I know you can put where you want
then next to value, you can put
the price.
Yeah, the price, exactly where you want it to go. And then you can set a little note when the alert goes off, and you can go off on your phone and your computer.
Right click. It just added alert. Listen, I got it. I'm not tripping.
You have it all the time.
Yeah, listen, I'm not mad or I'm not upset because I missed the trade, because I mean, I missed several trades. It's a lot of, I look at a lot of pair and a lot of them play out the way I think that they're going to play out. That's not a big deal. In fact, I'm encouraged because the pairs, this hit right at the spot and rolled out. Though that's encouraging. The next time I'll be in it. Like this huge trade that's setting up, I'm going to be in that trade. So it's encouraging when the trades shake out, you know, in your direction. But the point is, you're still going to have to make a decision on which trade you take. This is going to happen to you a lot. A lot. You're going to get in the trade. You're going to trade something different. And this one is going to move more. So what? Don't be a pig. Bears get paid. Bulls get paid.
But I'm just, don't try and justify that you just said that this girl told you to get in the US.
But hey, a lot of times you're gonna listen to outside sources, and that I'm glad we're talking about this, because this goes.
I didn't tell you. I didn't force your hand to go and look at US 30 for the full day. I'm just showing you a few tricks. Yeah, and you said you can right click. I didn't know you could even be so tech savvy. This is all new to me. If you go on, you know, it says unnamed, and that box next to it.
Where?
Click on that.
Where's unnamed?
Right at the top. Go across right. Go to the right. To the right. To the right. Well, I can't see your. I can't see your mouse.
Name.
Yeah, next to it, where it's got that box, that rectangle box.
Select layout.
Yes, correct. Select it, and then if we go on number 2, split screen. There you go. You can watch in 2 pairs, even multiple pairs at the same time. Thank me later.
Yeah, I didn't know about that. That might be.
But how do you select another for the other window?
Yes, this girl.
Yeah. So look, y'all. This girl never.
How do you select another pair for the next window?
Oh, so you see this blue box that's surrounding this EuroCAD. If you
Yeah.
click on Eurocad, the other screen, that the second one that you've just opened,
This one.
yeah, and then if you just go into your pairs on the right hand side,
Right here.
yep,
Oh, I
and
can
you
get
can
it.
click whatever pair you want, and you can even change the time. Is it time? Yeah, you change the time, so that can be, so you can even have Eurocad on a 15-minute or a 2-minute, and then have the left hand side on like a 1 hour.
Oh, is this how you trade the US?
That's how you did your US 30.
Yeah,
Okay.
this is how. Yeah, this is how I've been trading US 30.
Oh, okay. Okay.
Yeah. So
Okay, and that means you can do triple, quadruple. Okay.
yeah, I think I've only paid for the 2 screens, but the more your subscription model on TradingView, that you can get multiple screens or multiple charts.
Which one do you have? You have a pro?
Yeah, it can only do 2 screens.
So listen, how do I change the time, like instead of the 2 hour? I got
Just press the time over there. Just press the time.
where? I don't
Yeah,
see
just
it.
where the time, where it has the 2 hour on the
Oh,
left.
over here?
Yeah, yeah, you can change
Oh,
it.
because it's highlighted. Okay, all right. I was looking for it in that screen. Okay, yeah, this is very helpful.
Oh, sorry, did I
Yeah.
help you?
Hey, yeah, that's the least you can do after you cost me 132.
Excuse
Yeah.
me. Eurocad could have got you that 20K or whatever you wanted, but if you just put an alert in, then obviously you know it all because you know how to right click and click on alerts.
No, I don't know at all, but listen, I am a granddad. So listen, normally, I could wake up, drink my coffee, do my thing. But this particular morning, Leandra, like she had like 30 different messages and distracted me from this trade.
Excuse me, can you just go back to what day was that it tapped in? Please, we'll go back.
It was like the 17th or the 22nd.
22nd, that was Friday. I never messaged you on Friday.
You messaged me 12 times.
No, I didn't. Not on Friday. Not on Friday. Not about US 30. No.
Thursday.
Thursday. No, I don't think I messaged you about US 30 on Thursday.
When did you make it? You made
it was Tuesday, I think it was. It was the 12th.
Oh, it was Wednesday.
It wasn't. Tuesday. I think it was Tuesday.
Yeah. Okay, so maybe I was watching it after that, anticipating that I was going to get paid, and I never got paid.
Yeah, so please have some self-awareness.
You get him had.
Listen, y'all. UJ is going to be my golden goose this week. Or maybe it happens. Maybe it won't happen this week.
Silence golden.
I'm going to trade this up first. And then I'm going to trade it back down. Yeah, I mean, are y'all tracking?
Yes.
Not really.
Okay, don't track. Don't track. When I show you these remarkable numbers, you know where I got it from.
Don't get distracted.
Okay. I'm gonna put the some girl from across the pond. I'll put her on silent. Put her in timeout. Do you guys have any other pair or any other questions? Listen, I think that this community is awesome. Like one of the reasons that I even wanted to join a trading community is to have people who see the charts differently, who see different things in the charts, because that's where the true value is. It's not for everybody to see the same thing, because if you see the same thing, you'll never have a different view. Oh, AJ, you'll never have a different view of the market. And I think we're getting that, and we're getting it for free. That's the thing that I laugh about all the time. When I joined Ruby's group, we used to have to pay, but now I'm getting to talk to other traders and get other viewpoints without having to pay for it.
Censorship.
And you know, we have some of the same people that we had in Ruby's group, and people who excel at various strategies or different ways. They excel in different ways, and they're in the group. So I'm very thankful for everybody who participates, everybody who shares what they think, everybody who shares what they know, all that good stuff. So please continue to ask questions or point out things that you see in the market, because it just makes for a better trading environment. Oh, let's talk about this ugly chart of AJ. All right, so what do you think when you look at AJ, Mark? Are you still with us, Mark? If you're speaking, we can't hear you. Okay, I see Mark, but maybe she's having technical difficulties.
She had put some notes in the chat. I think it says she had her retracement to the middle of the golden zone at 96.96 or
Okay.
90.42. And then she said there was a
96.
imbalance above that too.
Todd, is that a wick on the last candle? I can't
Yes,
see.
it is.
Okay. So it looked like it created a swing low. I mean, a swing high.
Well, it did. That's what I was going to say. There's a high, a higher high, and a lower high, which tells me that the market is going to push back down, or it's my key. So what I would do in this case is probably I would fib it from the top, which might not do us any good because we know it already gave us our optimal trading entry. Look at that. Market came here. It pulled right back to the 78.6. Son of a gun. Okay. So it gave us one entry. I think that's pretty good confirmation that the market is pushing down. Mark, are you still there?
Okay. Sorry, I'm kind of moving. That's why I kept going up.
Oh, it's all good. This market is definitely pushing down. What I would do is look. Man, where's the order block? Where's a good order block? The 8-hour maybe? Okay.
I feel like it's gonna go back up to that order block that was on the I don't know if you were on the daily or the weekly.
This daily right here.
Before the drop back down.
There's also a 4-hour imbalance above, directly above.
Yeah, that was the imbalance I was talking. I mean, that was the order block I was talking about. I'm sorry.
It's gonna go past. I think it's gonna go up into this wick.
Oh, okay.
So this is where price is now. I think it's gonna pull. This, there's an imbalance here.
Yeah.
And then 12-hour has this. What is that? 12 hours of the daily. The daily has this order block right here. I would probably, instead of just worrying about this doji order block, I would probably focus on this imbalance.
Okay. The one on the 4 hour, is that a stronger imbalance than the 2 hour imbalance?
Well, the further down you drop, it's going to clean it up, right? So this 4 hour, look how big it is.
Yeah.
So if you go to the 2 hour, it's a lot smaller, right?
Yes.
So it's a cleaner version.
Yeah.
It's not only a lot smaller, but it's higher up than what your 4 hour was. I think this red line is probably the middle of your 4 hour.
Yeah.
Right? So
Yes.
that's what that red line is, the middle of the 4 hour. But if you drop down to the 2 hour, I like the 2 hour chart for whatever reason, but it's higher than this red line. So if I did a fib, I mean, if I put the GAN box on the 2 hour, it's probably about a 15 pip difference, right?
Yeah.
So if you just concerned about missing a trade, then maybe you could include both of them.
Okay.
So maybe your short position could be like this, about a 20 pip stop loss.
Okay. Let me do that.
Does that make sense to you?
Yeah, it does. Nice.
And if y'all start getting good at your analysis, or if price respects it a few times, then you'll be comfortable to take this hedge trade up, buy it up to sell it down.
Okay. Okay. Thank you, Todd. Thank you so much.
You're welcome. Well, guys, I think that sums it up. Don't we all love a good hedge, though? So this is what I asked y'all to do. If y'all see trade setups, put them in the trade idea. Then maybe if somebody has a question, they can ask you about it. But what that does is it helps people who started wherever you started, right? They're not at you, and maybe they don't see things on the chart yet. So you have to kind of turn around and help them out. At some point, all of us we leaned on somebody else's analysis. We leaned on whatever somebody else saw, right? We didn't come into the market seeing what we see or knowing what we know. So I would just ask that if you're at a point to where you can identify trade setups, whether they're right, wrong, or indifferent, put them in the chat, put them in the trade idea. The market doesn't necessarily have to respect your setup. I mean, a lot of times the market doesn't respect my setup. A lot of times I'll think I'll see a trade setup, or I'll see a trade setup and the market conditions will change, right? Somebody will raise an interest rate. Somebody won't make a number. So don't worry about if your trade idea pans out. That's not the important piece, right? There are 1,000 different things that go into whether or not it plays out, right? But make sure you're posting your setups so somebody else can benefit from your work the same way we've all benefited from somebody else setting us up before. Okay.
Yeah. Thank you.
You're welcome. You guys have questions, comments? So hopefully everybody will make their 10% this week. You know, the market still owe me my 20K. Terrence, that was a awesome setup that you saw. I know you probably off the call by now, but you know, I just everybody, man. You know, Terrence started after, you know, a lot of us started, and he's really really made strides. It just goes to show you that it doesn't matter when you start. The thing that matters is if you take time to put in work, right? Your study habits will oftentimes tell you what your earnings are going to be in the market, right? The more you study, the more you're going to have the potential to make money, right? Because you're going to see setups that you wouldn't have saw if you didn't put in the study time. And I know all of us have different time available to us to study, but please make sure that you're making some time, you know, 30 minutes a day, 15 minutes a day, whatever. I'm going to watch a video every day. Just make sure you're taking some time to sharpen your skill set. All right. Because eventually, I think all of us would like for this to replace going to work for 8, 10, 12 hours, whatever it is that you're working. And if you spend the time, the setups will be there, and your ability to pull money out of the market will keep growing. And eventually you won't need a job. You'll just need to do the trade setups. All right. I appreciate you guys' time. It's been a good Saturday. I think that we got out a lot of the information that we wanted to get out. I think we kind of have an understanding of what we want to see from the different pairs. There are a lot of different trading opportunities. So please put your trade setups in the chat. You know, do it for the old dude. Do it for the old people. Do it for the grandpas that are out here trying to trade. And I will talk to y'all, you know, throughout.
The ones who missed the trade.
Thanks, Todd. Thanks, Todd.
Hey, we all missed some trades there, Leandra. You know, just make sure you keep hassling me about the US30, because I think that eventually it's going to pay us. It's going to pay me.
Well, it pays me anyway. I don't know about you.
Well, there you go. You know, but you know, I didn't see the setups as clearly as you did today, obviously. And
I go down to a lower time frame.
Yeah, well, you know, hook a brother up. You had posted it, I would have saw it.
I did.
Well, do it again next time and call. Hey, sometimes you might have to use a grandpa's name in you have to single me out sometime.
I know I do.
Well, I appreciate you.
Say what you like. Okay, thank you.
All right, I gotta get at least get me a peanut butter and honey sandwich. Man, brother, man, starving.
It's real traders food, isn't it?
Well, it makes me see that market clearly.